Hello traders, hello trading world. It is July 17th, 2022, Sunday mid-afternoon. And by the way, I'm coming to you on this Sunday afternoon because I am on vacation and I know I'm not getting up early enough to put this together and get it out. And we'll be lucky if there are any more pre-markets this week or for the next couple of weeks while I'm on vacation. I felt today was very important to give you a heads up on what's coming this week. The title for today's outlook is Gamma Risk is off the charts right now. Paired with tape bombs means big explosions and or implosions ahead. With earnings season in gear and another Fed rate hike on the horizon, there is a huge supply of sparks leading to a big explosion and or implosion. Let's explore how and the why for a moment. We have been stuck in a range the last 30 days or so. A rather large range, but a range nonetheless. As we meander back and forth over the range, we continue to create obscene amounts of open interest in this range. I have warned about this before in a previous pre-market video, not needing to over allocate because we are in the same range, so you don't want to risk too much money or put all your eggs in the same basket. Take a look at the money option over the next couple of expirations and you'll see what I'm talking about. So right here, the at the money option is the 385. And as you can see, the volume that we've churned is enormous. And then you can see the open interest still in decent size on an expiration Monday. Let's look at the next expiration. Just 3 days away. And you can see again the huge amounts of volume that spun and the decent size amounts of open interest still in play. And even going out to the next expiration, you can see again huge amounts of volume and really decent amounts of open interest on both the put and the call side. Now, looking at all this open interest under the puts and calls, in addition to all the oncoming tape bombs, there is no way to really discern a bullish or bearish bias. Now, every day I close out my pre-market video with the same line. Please know and understand your risk, because your first and most important job as a trader is to protect the capital you already have. Here's a jewel that took me a long time to grasp. It's good to have a trading strategy, but no matter how good your trade strategy is, it means nothing without proper risk management. You can have a 90% win rate on your trades, but if the 10 times you are wrong wipes out your account, What good is a 90% or even a 99% win rate? Good trading to me is about risking a minimal amount over a healthy number of occurrences. Emphasis on occurrences. If you master this, you can have a win rate of 50% and still be a great trader. You know that old saying, risking 2 to make 1. So when you do win, even if it's at 50%, if you make 2 times the amount that you lose, you're still a great trader. Sorry, I got a bit off topic, but back to gamma risk and the setup. With all the open interest built up, ooh, excuse me, I can't seem to clear my throat for nothing today. But on the open interest, just remember, with such a large amounts of open interest on either side of the trade, the more explosive the move will be as people either realize they are wrong and or have to close positions. Imagine a crowded boat with large amounts of people on each side of the boat. If enough people get scared and run to the opposite side at one time, the misallocation of weight will capsize the boat. The same is true in trade, but instead of turning a boat over, we get a super explosive move that could turn your account over. Now, as we get closer to the Fed announcement, the Fed enters into a quiet period, and the market becomes data starved, meaning the market can be spooked by any piece of data as it tries to handicap the Fed announcement ahead of time. Don't believe me? Just look at last week's retail sales report. And to make it a little bit more interesting, let's look at it on the actual ES. All right. The retail sales report came out last Friday around 8:30 a.m. At 8:30 a.m., we swung almost 16 points, and it kicked off a nice run. Now imagine if this was a report that actually meant something. Retail numbers were better than expected, but come on, not that good. The scary part about the retail numbers is that it may signal to the Fed that it's all good. The retail consumer is in a good place, not slowing down, so they could afford to be hit with 100 or even 150 basis point rate hike. Now, at the same time, not realizing that credit card debt or balances being carried has skyrocketed over the last couple of months, giving us the ultimate setup for defaults. So far, we have covered the setup or mound of gunpowder that open interest build up in the large volatility box we got going. The multiple sparks, all of these earnings reports and the news events on the way to the Fed announcement. Now, let's talk about the accelerant. You know, the gasoline poured over the fire? The accelerant is the correlation coefficient. Going back to Friday, this is just one way to look at it. There are many ways to look at it. But going back to Friday, we had 95 advancing issues versus 6 declining issues. This means that the market, the almost entire market is moving as one. Coming into this week on the SPY, we have an overall bearish bias closing below the 385.13 with a possibility of a 378 retracement. The daily chart is in control with bear trend going while we have a bullish momentum going. However, we're coming into an exhaustion point on the daily chart's momentum. That exhaustion point could find itself somewhere between 386 and 393. This is coming into its third test of these levels. So we could be looking at a breakthrough or one hell of a rejection soon. Beware, at 8:15 a.m. housing starts report, which could be a spark for Monday. Just like we had that retail sales pop and take us on this nice run for Friday, housing starts to do something similar. So be very careful. With all of that said, let's take a look at key levels for tomorrow. All right, here we are back with the key levels of the day, or for tomorrow, I should say. Starting on the resistance side, we have our jack resistance from 385 to the 386 area. Then on to the queen resistance area, which is going to be the 387 to the 388 area. This area is going to have a lot of pressure, or it holds a lot of rejection up here. And if we reject once, we may come back and retest and push through, because we've tested this area 3 times before. King resistance is 389 to the 393 area. Now on to the support side. Our jack support is going to be 384 to the 383 area. Queen support is going to be 382 to the 381 area. And then king support is going to be 380 to the 378 area. The main thesis for tomorrow is bearish, closing below the 385.13 with a projected target low of between 381 and 378. The alternate thesis is bullish, closing above the 385.13 with a projected high of between 386 and 393. The current main channel we're in is 379 all the way up to 397. We're at one of those possible momentum change moments, which can be a scary point, because there's going to be a lot of back and forth or indecision trying to make up its mind whether to continue or reject. That takes us into the scenarios for tomorrow. All right. Our first and most probable scenario is going to be our expansive range day structure. We can look to set a decision area low boundary around the jack or queen support area before chopping back and forth for the day. And even in the chop back and forth, we could still push the upper boundary higher and higher. That is our expansive range day structure. And again, the most important part of a range day or expansive range day structure is noting where the previous close was, which is represented by the blue line, and understanding that we're going to cross back and forth at least once across that previous close, making this a range day type structure. All right, our next day structure could be our rounded reversal day type structure. And actually, the probabilities are pretty much the same for the rounded reversal day type tomorrow in the expansive range day. But in the rounded reversal day type structure, we could get a continued push higher toward the jack or queen resistance area and find midday chop around either the queen or king resistance area before spending the same amount of energy we use going up to come back down the second half of the day. Keep in mind that housing starts is before the market, so we could get a vice versa alert on this as well, where instead of starting down, it could either continue down before market or look something like this, where we continue down through the cash open and find our midday chop either around the possible queen or king support area before spending the same energy we use coming down to go back up the second half of the day. So this is our rounded reversal day type structure and the vice versa alert we have on it. All right, our last and least likely scenario is going to be our trend day up, which means we open gap up and start with a fade back toward the previous close represented by the blue line. We find support on or before that previous close, then begin our uptrend for the morning, also known as our golden window of trade. We find our midday chop around either the possible queen or king resistance area. And usually we start the second half of the day with a head fake that fakes to continue the primary trend of the morning, and then at some point headed toward the close we get a fade into the close. That's our trend day up. Also, from this far out, I'm going to put in a vice versa alert on this as well, because housing starts, there's no telling which way this can go. But because of housing starts at the 8:30 pre-market hour, it could cause us to have a gap down also. And if we have that gap down, we could get that pop back up, and the previous close could become resistance. And we get that resistance on or before that previous close, and then we begin that golden window of trade for the morning. Find our midday chop around either the queen or king support area, and then get our fade, or actually it will be our kind of pop into the close. So those are the three scenarios to be prepared for coming into Monday. Please be careful this week because, like I said earlier, any bit of news, this tape is really jumpy. So it doesn't take much for any bit of news to take us on a wild ride. That wild ride could be up and it could be down. So please be careful. As I say all the time, please know and understand your risk, as your most important job as a trader is to protect the capital that you already have. Again, I'd like to let you know I am on vacation, so pre-markets over the next 2 weeks will be rare. I will try to pop in because I do have positions on as I monitor positions, but I would really like to enjoy my vacation, meaning I'm not getting up too early for these next couple of weeks. But I wanted you to be prepared, and I wanted to warn you of what's ahead. So as always, wishing you a positive trading day. I hope this helps. Enjoy your week.